What is cash equivalent? Based on IAS 7, it is a short-term, highly liquid investment that is readily convertible to known amount of cash, subject to an insignificant risk of changes in value. When we say short-term, the investment must be acquired 3 months or less from its maturity date. So even if the investment has an original term of more than 3 months, it can still qualify as cash equivalent as long as it was acquired 3 months or less from its maturity date. Okay? So since equity investments do not have maturity date, it cannot be classified as cash equivalents. However, for redeemable preference share, it can be classified as cash equivalent. So what are the items classified as cash equivalent? So there are three main items. Treasury securities, these are issued by government and it can be in the form of bills, note, or bond. So the difference among the three is their term. Number two is commercial papers. So these are issued by private companies. And lastly, time deposit. This is offered by banks. Okay, the term money market instrument is a general term for short-term investments. So a money market fund may consist of treasury securities, investment in treasury securities, commercial papers, time deposit. So what if these investments can qualify as cash equivalent? What will be their classification? So these are the classification rules. So if the investment is silent as to its maturity, it can qualify as cash equivalent, except for treasury notes and treasury bonds, because normally these investments have a maturity term of more than a year. So if it's acquired more than 3 months before maturity and will mature within 1 year as at balance sheet date, the investment is considered as a short-term investment. If it will mature beyond 1 year as at balance sheet date, it is classified as long-term investment. So what is the measurement and presentation of cash and cash equivalents in the financial statements? Okay. So cash is measured at face value. If it is denominated in foreign currency, it must be converted using the current exchange rate. It is presented as a current asset, as a separate line item on the statement of financial position. So let's try to answer some questions. All of the following can be classified as cash and cash equivalents except A. Time deposit, B. Commercial papers, C. Equity investment, and D. Bank overdraft. Okay? So letter A and letter B are definitely cash equivalents. Even if the problem is silent as to their maturity, they are considered as cash equivalent. Okay, so it's between C and D. For D, bank overdraft as a rule is classified as a current liability. However, in some cases, it may be offset from another bank account with a positive balance. So, in effect, it can be classified as cash and cash equivalent. It is included as cash and cash equivalent. While C, equity investment, can never be classified as cash and cash equivalent because shares do not have maturity date. So the best answer here is letter C. Next question. These comprise cash on hand and demand deposits together with short-term highly liquid investments that are readily convertible to a known amount of cash and that are subject to an insignificant risk of changes in value. So the choices are letter A, time deposits, B, cash, C, cash equivalents, D, money market instruments. Okay, so let's read again the question. These comprise cash on hand and demand deposits. Okay, together with short-term highly liquid investments. So this is the definition of cash equivalent, right? So let's see the answer. Okay, there is a better answer. Next question. This comprise cash on hand and demand deposits together with short-term highly liquid investments that are readily convertible to a known amount of cash and that are subject to an insignificant risk of changes in value. The choices are time deposits, cash and cash equivalents, and money market instrument. Okay, so it's an easy question because it's just pure memory. There's no analysis here. The answer here is letter B. Okay. Before we proceed to bank reconciliation, let's try to solve some problems on cash and cash equivalents. The entity's ledger showed a balance in its cash account as at December 31, 2020 of 11,640,000, which was determined to consist of the following. So these are the items that are included in the cash account of the entity. Okay, so there are also additional information provided. So let's check the requirement. The requirement is, assuming the company uses calendar year, what is the amount of cash to be reported on December 31, 2020? Okay, so I'll give you a tip in answering problems. So go directly to the requirement. Though it is obvious, or it's the standard way in problem solving to check first the requirement before solving, some students tend to answer immediately the problem without checking first the requirement. Okay, because these students somehow gets excited when they see the problem they are solving is similar to what they have reviewed. What if the requirement is modified? Okay, so you get the point. So that's my tip. You check or you go directly to the requirement before solving. Okay, so let's answer the problem. Okay. Also, in solving this problem, in this type of problem, there are two ways. So first is to start your computation with the cash balance. And from the cash balance, deduct the items that are not classified as cash. Okay? Okay, so that's the first way. Start from the balance. The second way is to ignore the balance and just check each item whether it is cash or not. I prefer the latter because in the first method, there are it's not safe because what if the total total or the balance is not accurate, okay, because there are some problems in which the footing or the bottom line is not correct. Okay, so even if you know the classification of the items, but if you start from the beginning balance, your final answer is wrong. Okay, so it's the second way is safer. Okay, so we will use that. Can also, there are additional information here, so we'll check that later. So first, checking account. So it is a cash in bank. Okay, so included. Okay, it's included. Customers check outstanding for 18 months, so it is a stale check. So it's not included. IOU from employee, so it is a receivable. Okay, so IOU stands for IOOWE Okay. So money market placement can be classified as cash equivalent. Okay, but in this case, it's not because um, the term is 6 months. Okay, nevertheless, it's still not recorded as cash. Okay, so it's not included. Okay, so it is a short-term investment. NSF check of customer. So it's receivable. Okay, so later I will discuss what is an NSF check. Pension fund. Okay, so pension fund is not a regular fund, so it's not used for current operations. So it's not classified as cash. So it is a non-current asset. Okay, petty cash fund. Okay, it's cash. Savings deposit in a closed bank. So it's a receivable from bank. Time deposit 30 days, so it's a cash equivalent. Okay, so only two items qualify as cash cash. Okay, so let's check the additional information. The entity has agreed to maintain a cash balance of 5,000 at all times at the bank to ensure future credit availability. Okay, so it is a compensating balance. However, there is no the problem is silent as to its restriction to withdrawal. So what's the rule? If the problem is silent, the compensating balance is not legally restricted as to withdrawal. So it's part of cash. So the 5,000 cash balance here is already included in the checking account. Okay? Cash receipts journal was held open until January 15, 2021, during which time 300,000 was collected and recorded on December 31, 2020. Okay, so from January 1 to January 15, there is a collection of 300,000 and it was recorded on December 31. So we call it window dressing. Okay. So this one is included in 3,000. 3 million, sorry. But it should not be included because this pertains to receipts for next year. Okay, so we'll deduct 300,000 from 3 million. Next is a check of 50,000 dated January 15, 2021 in payment of accounts payable. So it's a post-dated company check. It was recorded and mailed on December 31, 2020. Okay, so since it was already recorded, meaning this 50,000 is not included in the checking account. Okay. So we will restore it to the checking account balance. So we'll add it. Check of 20,000 dated December 30, 2020 in payment of accounts payable was recorded and mailed to suppliers on the same date. So there's no accounting problem here because the check is not post-dated. It was also delivered on the same date and it was also recorded on the same date. Okay, so there's no accounting problem here. So disregard this one. Okay, so let's check the solution. So the adjusted balance of the cash in bank or the checking account balance is 2,750,000. Then add petty cash fund to get the adjusted cash balance of 2,765,000. Okay, so this will be the amount to be reported on the statement of financial position.